For that, Manisha. Well, time to highlight all the top movers in the first 45 minutes of trade. Mangalam joins us to tell us about Sula Vineyards. Well, that stock is flying away, Mangalam.
Yes, you're talking about wine on Monday mornings, Nigel, because in the third quarter, a lot of people consumed a lot of Sula wine. That's what the company's third quarter update says, because they've reported their highest ever quarterly sales. Remember, this is the first quarterly update that the company has given post-listing. The stock up 9%, sales growth of 13% year-on-year in the third quarter. And the third quarter typically is a strong quarter for wine consumption. So on a high base, they've seen a 13% growth. In fact, for the year itself, there's been a near 28% growth. The growth has been broad-based across their own brands, which accounts for majority of the company's revenue. The sales are up 13%, 187 odd crores out there. And wine tourism, which is the wine park, etc., has seen a 13% growth out there as well. 23 crore is the company's revenue there. The key trigger now for them to watch is that their 2.5 million litre cellar has been on stream, and this is in time for that 2023 grape harvest season, which the company believes has strong visibility in terms of both quality and quantity. So additional capacity right in time should aid their volumes further.
All right, Mangalam, thanks very much for that. So that's Sula for you. Look at PVR. I mean, if we can quickly put that up. It's, sharp reversal. Stock actually opened higher. The high was 1762 and now at about 1717. So from the gap up that's been aggressively sold into, this is one of the stocks that we had highlighted a couple of days back on Market Laser as well. It's the same problem for a lot of these stocks, which have all now, a lot of them have fallen below this sort of trend line from the lows of June. For the first time, this is happening for many of them, and that kind of then acts as a bit of a resistance. I think there is a downgrade as well from Kotak this morning, which has come through. Although, I mean, I looked at it, they're kind of saying, well, audiences will not tolerate mediocre films, and that's a structural kind of negative because of the rise of OTT, etc. Their price target, though, is still about 1850, even after the downgrade. So, I mean, the earlier one, I guess, it was even higher. 1716, though, on the name. Sonia.
It's also a very interesting report. They're saying that, the box office collections have fallen a lot. The total number of Hindi films crossing 100 to 200 crore box office collections has fallen to just 7 in calendar year 2022 from 17 in 2019. So, that's the premise that, OTT has really changed the consumer behavior and hence that downgrade. But let's move on and track Just Dial. That's been a big mover this morning. Rima is here to tell us why. Rima, over to you.
Thanks so much for that. So it's a strong showing from Just Dial in the quarter gone by. Revenue growth at 7.8% on a quarter-on-quarter basis. On a year-on-year basis, it's touching that 40% mark. And if you look at the quarter-on-quarter trajectory, you would see for the last 3 quarters, things have been pretty good for Just Dial. They have been reporting a sequential improvement. On a year-on-year basis as well, 40%, 39.3 to be precise, is the best that we've seen in the last many quarters. Margins have improved for the 4th consecutive quarter. Q3 margins at 12.2%. But if I compare it to the prior quarter, it was 8.3%. And same time last year, margins were at 3.3%. And this improvement in margins is driving a 44% increase in the company's profitability. Paid campaigns, that's a key metric that we track, and that's seen an increase of 19.3% on a year-on-year basis. Again, the best that we've seen in the last couple of months. Citi has written a note. They're saying that Q3 top line was in line, but margins were ahead of their estimates. They've put the target price as 735. Valuations at 8 times March 20 PE. March estimates. X of the cash is just at 8 times, and therefore they're finding the valuations inexpensive, which drives their buy rating on the stock. Back to you.
Okay, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, it's the